spearhead the session, we have with us Ritu Singh, Deputy Editor and Anchor, CNBC TV 18. As they often say that to get the right answers, you need the right questions. It's only befitting that Ritu will be spearheading the session. And this afternoon, at the Global Fintech Fest 2024, we have the august presence of none other than Shri Dinesh Khara, Chairperson, State Bank of India. So please put your hands together, ladies and gentlemen. Please help me welcome on stage Shri Dinesh Khara, Chairperson, State Bank of India, and spearheading the conversation, Ritu Singh, Deputy Editor and Anchor, CNBC TV 18.
Thank you all. The topic of this session, interestingly, is the evolution of banking, the past, present, and the future. And we couldn't have asked for a better person to lead this chat, because not only is Mr. Khara, the recently retired Chairperson of State Bank of India, which is not just the country's largest bank, it is also one of its oldest, and it's unbelievable, the kind of journey that it's had. But, before anything, Mr. Khara, I want to congratulate you on your illustrious run as the State Bank of India Chairman. Some have given you the moniker of the profit maker, the 200% kind of increase in profits. We've seen credit costs coming down to just 47 basis points and a 325% return on stock during your tenure as the SBI Chairman. So congratulations on this fabulous run, Mr. Khara, and thank you again for your time here today. Let me just trace back the evolution of banking. And, if you just look at State Bank of India itself, started in the first decade of the 19th century. That's why you trace your origins to the back of Calcutta, of course, then the Imperial Bank, and now, as we know, you State Bank of India. What to your mind have been some of the most significant banking reforms that have taken shape, whether that be nationalization to liberalization, to more recently with GST, with the IBC, that have had the most profound impact on the way banks that we know to them today function?
Thank you very much, Ritu, first of all, for giving all the credit for the kind of performance which the bank has demonstrated in the past couple of years. Well, of course, it gives a lot of satisfaction to see that kind of performance, but nevertheless, there's nothing but a reflection of the team effort of all SBIans. Now, when you talk about the most profound changes, I would say that banking is actually the proxy to the economy. And we have seen that from time to time, whatever be the need, the banks have evolved. Way back in 1955, when the Gorawala Committee had recommended that there's a need for agrarian reform, that's the point of time when State Bank of India came into existence through an act of parliament. And the expansion of the branch network took place in the rural India. Happened to see that, always right from the second plan onwards, it was always infrastructure-led investment which took place in the country. And of course, we have seen the benefit of that. We have seen countries which got independent almost the same time. But where are we, where are they? So it is all because the banking sector stood by the economy and tried to contribute. So that was the first major reform. Perhaps encouraged by the kind of financialization it started having because of the State Bank of India moving into the upcountry areas. It was a nationalization which took place in 1969. Then later on, the second phase of nationalization also took place. I think that was an imperative need at the material point of time, that there was a need for expanding the branch network. Then came 1990 with the liberalization of the economy. That was a point of time when it was felt that now it's a time for bringing in more competition, and private sector banks were given the license, which actually worked as a catalyst for the public sector banks too. And they also, particularly for State Bank of India, I can say that we were all geared up to meet this competition, and we ensured that we stay ahead of the curve. Next comes the era of 2000. That was the advent of technology, adoption of technology to a greater extent. By this time, we have started moving from the distributed computing to centralized computing. That is the foundation stone when it comes to the today's digital architecture which we get to see. And of course, now it's a history that we have seen that how the adoption of digitization has happened. Then came Jan Dhan. It was actually 2004 onwards. It was a jam trinity, Jan Dhan, Aadhaar, mobile, and it led to a situation where it was a democratization of the banking services through the Jan Dhan account. So this is something which happened. And today, thanks to that Jan Dhan trinity, we have got a situation that when it comes to, we have actually seen the benefit of this when the COVID struck. And on day one, when the common man was required to be given a certain amount of money in their hand, and how fast we could make it happen. So I think it is nothing but that technology which has given us that prowess today to take care of the financial needs of the common man of the country. And of course, now we have come to a stage where we are looking at not only meeting the needs of the common man, but also ensuring that we should meet the aspirations of the common man too. And also we are moving towards hyper-personalization, which means that all this while the data was static. Now that static data is being put to use with the help of analytics. Various algorithms are being developed, and based upon that, we're in a position to do the hyper-personalization. And of course, this analytics is now turning to be handy when it comes to risk management, when it comes to prediction in terms of the behavior, the customer behavior, you name it, and we're in a position to leverage the analytics in that direction. So this is the broad canvas in which the banking has evolved in the last couple of years.
Sure, that's a fine encapsulation, Mr. Khara. But, you know, as a legacy bank that's nearly 200 years old, to transforming into what State Bank of India today is, carrying the burden of the past, but now with a fully digital arm with YONO, if you could take us through that transformation journey, the challenges that you came across, and would you say the transformation is complete even in 2024?
Well, YONO, we have now 80 million registered users already there, and almost about 10 million users are logging on a daily basis. So I think in many respects, it would be a record of sorts across the globe. I would say that when we had Envisa as YONO, we thought of YONO only as a retail solution. And initially, it was thought to replace the internet banking. But when we introduced YONO, we thought that no, it should be much beyond that. So it's actually a combination of three. It's a pure play banking, it's a financial superstore, and it's a e-commerce. All three embedded into one is YONO. And since we have got a huge existence in terms of all our financial sector subsidiaries, we're in a position to showcase their products. We can source the credit cards through YONO. We can source the investment for SBI mutual fund through YONO. We can source life insurance policies through YONO. We can source general insurance policies through YONO. Yeah. So I think in many respects, it's a very unique proposition where we are not in a position, we are not only offering the solution in terms of the financial needs, banking needs, but actually the financial needs. So to that extent, it is certainly a value accretive for the bank, and also for the customers, it's a convenience. And I would say that we have started looking at the volumes it is generating. Last year, we generated almost about 1.7 trillion worth of loan underwritten through YONO. And they were essentially into the pre-approved business loan, pre-approved personal loans. We are giving in-principle approval for the car loans and the home loans also with the help of YONO. Now we have gone beyond the retail. It is now being used for the YONO business when it comes to opening of LCs, bank guarantees, etc. All that can be done through YONO, and it's a huge adoption which we have seen. YONO has gone beyond the boundaries of the country. Now, because in the overseas locations, we have got very light footprints, and generally the customer base is quite broad-basely spread out there. So just to cater to their needs, we have got the YONO for various global destinations also.
Yeah.
Yeah, and now we are working on YONO 2.0, where the intention is that it should be made more modular. It should be made more faster in terms of processing, and I'm sure the path which you are following, we will get to see the YONO in new avatar. We have already seen some of the additions which you have done. They are happening seamlessly. Minimum viable products are getting introduced.
Yeah.
And that is something, and also its rating is getting improved, most important.
Well, State Bank of India really prides itself for being the banker to every Indian, right? And a large part of that reason is because of your physical presence on the ground. To what extent do you think this physical branch banking can be replaced by digital channels? How soon, before you see increasingly, the bulk of your incremental customers and incremental business only coming through the digital channel?
Ritu, interesting question, because when it comes to the kind of customer base whom we serve, happy to share that State Bank of India serve 50 crore customer, which is almost 1/3 of the country's population. And when we serve 1/3 of the country's population, we have to take care of all kind of customers, their preferences. So we actually look at YONO as a distribution channel, one of the distribution channel. The way branch is a distribution channel, YONO also continues to be another distribution channel. And what you mentioned in terms of can the physical presence be replaced by YONO, or the YONO can replace the physical presence, or either way out, I think it's an era where any commercial organization has to think in terms of multiple channels of distribution. And to my mind, there is a scope for coexistence of both, even in the foreseeable future.
Well, I'll quickly step away from the institution itself to some of the more present issues that the banking industry finds itself in today. A few years back, the whole talking point was about bad loans and how banks were cleaning that up. And now banks have emerged healthier with stronger balance sheets. But as the governor often repeats, it's in good times that lenders should not let down their guard. That's something that the regulator highlighted with unsecured lending, and we're seeing that play out now with banks reporting higher stress in their retail book. But to your mind, now that we're in these good times, what are some of the emerging risks to be wary of, for the present generation of banking?
Well, rightly said that invariably the mistakes are committed in the good times, because if at all you take away your sight from the road and also the steering wheel, the accident can happen anytime. So that is one of the reasons why for any banker, good time or bad time, a risk is always to be kept in mind. Normally, at times people tend to ignore the risk, but that should not happen. And for that, I think now the system has strengthened quite a lot in terms of the infrastructure, in terms of the MIS, which actually ensures that there are early warning systems in good time, which actually gives a good opportunity to plug any such chances of any accident. So that is, I think, which has happened. But yes, of course, going forward, what you mentioned in terms of unsecured lending, there are different variety of unsecured lending. There were people who were not even looking into the income streams and were going ahead and lending. So those are the people where there could be challenge. But yes, of course, if at all there is a adequate assessment in terms of the income flows and the certainty of the income flows and the EMIs, then perhaps it may not be as much of a challenge. So much of it will depend upon unsecured credit to which category of customer and how much. So that is something which is going to define and determine how this unsecured book is going to look like in the different banking.
Well, that's something to keep in mind. But, the other issue that's really dominating, the conversations among bankers is this scramble for deposits. And that's because, household savings typically, which would, stay in vanilla bank accounts, are moving out because there's more financialization. They're on the hunt for higher returns on their, savings. And also, of course, tax efficiency. Do you see a structural, problem emerging for the banking sector to tackle, with especially as we're seeing more and more banks look at the digital route, not so much as the physical footprint? Do you see this impacting credit growth as deposit continues to lag?
Well, this is something our Chief Economic Advisor, Dr. Soumyakanti Ghosh, has come out with a report, and which is actually based upon the RBI report, where he has analyzed that we have seen similar kind of a situation way back in 2003-04 also. And his assessment is that normally it takes anything up to 41 months for this divergence to get addressed. So I think our assessment was that by the June 25 or so, this should get addressed. But nevertheless, there are multiple options which are available to take care of the loan book growth, which I mentioned in the past for State Bank of India also. We had mobilized deposit at a point of time when nobody used to look at deposit during the COVID period. We have created an investment book, which is, even today also we have got investment book, which is almost about 3.7, 3.9 trillion. And we can easily unlock that investment and support the loan book growth. And of course, deposit is a franchise. Just to address that, in certain time buckets, we did tweak the interest rates. But yes, of course, any banker has to always strike a balance between the deposit cost and also the NIM. There's a trinity which needs to be met. So eventually, how to meet that trinity is nothing but a skill. So I think the skillful handling of the situation is something which will see the bankers sailing through the difficult times.
Well, that's a very clear, definitive timeline you're giving for when the problem may resolve itself. But, back to the theme of digitization, the digital transformation of the economy, are banks today, and especially legacy banks, public sector banks, adapting fast enough? Because if you speak to the audience, they'd probably say, when it comes to payments, not many are using their traditional banks. Banks have probably missed the payment revolution bus. But now that we're talking about the unified lending interface, the increasing focus towards digital instant loans, are banks adopting fast enough, or is that something you worry the fintechs may again take a lead on? I
think there are various reasons why perhaps when it comes to payments, they seem to have lost out, but they have really caught up in the recent past as far as their technology upgradations were concerned. As far as the lending is concerned, many of them have already gone for adoption of the apps, and also I think digital lending is becoming increasingly popular. And eventually, when it comes to various alternate vehicles which are available for the digital lending, I would say that at least banks, because of their network, they have got a reach, which perhaps may not be there. And also in the financial sector, perhaps the larger balance sheet gives some kind of a resilience to the system as well. And also, keep in mind that the compliance costs are huge and they are increasing every day. So there has to be a minimum critical size for any entity to really make a meaningful business out of it. Well,
speaking of the compliance burden, we recently had the Digital Personal Data Protection Act being passed. Seeking the consent of customers for every sort of transaction that you make every time. The rules itself, of course, are yet to be firmed up. But how do you see that changing the way some of the business models are built around this digital lending? What sort of challenges or opportunities do you think that may bring for the banking ecosystem?
I think we have been engaging on this DPDP Act for almost a year plus. And we were very carefully understanding what is the intent of the DPDP Act, though the regulations are awaited any time now. We had started doing some preparations already. And yes, of course, it will certainly need to revisit the way the banks do the business, or for that matter, why only bank? Any commercial institution in the country will have to be probably look into the regulations and its impact on the way the business is being done. There are huge responsibilities which are cast in terms of the intention which is indicated in the DPDP Act. So it will eventually get converted into regulation very soon. Just anxiously waiting how the regulations will look like.
Well, Mr. Khara, we're running out of time. So a final word, if I were to ask you what the banking ecosystem may look like in, say, a decade from now, with the new forces emerging, the technological transformation, the adoption of AI, the new Jam Trinity with the unified lending interface, open banking and whatnot, what are some of the forces that you think will most shape this ecosystem? What worries you most? And what are you most hopeful about?
See, to my mind, banking will be more like any other consumer entity where there will be plethora of products which will be available. Perhaps there would be need for doing some kind of a tailor-made solutions. And to that extent, banking is going to be a knowledge industry, will not be as much of the service industry or the transaction industry. And this is how I perceive the banks to be in the days to come. And of course, consuming technology, consuming analytics, consuming the latest in the area when it comes to customer behavior understanding, all these will be consumed by the banks, and perhaps effort will be to create solutions, tailor-made solutions. That will be the endeavor on the part of the banks.
All right. On that note, Mr. Khara, it's been a pleasure chatting with you, and thank you very much for sharing your 4 decades of experience in the banking sector and how some of that past may influence the future. Thank you very much for your time here today. Thanks all for being a wonderful audience as well. Thank you.